Alrighty, what is going on, everybody? Happy Tuesday. How is everybody doing? Sorry for the little bit of a delay, but I couldn't. My son had his baseball practice that I had to get to and bring him home from before we can do this. So instead of just rescheduling, I figured just pull it back about 30 minutes. So how is everybody? Hopefully everybody survived last week's I don't even know what you want to call it. I mean, frenzy of news events, central banks declaring mission victory or lack thereof, I guess, if you're talking about what the Fed is saying. So yeah, we've got a little bit of fundamentals coming in today from what the Fed, actually what Chairman Jerome Powell was throwing out there. Nothing really changes my anticipation of what I was looking at, though. So all right. I got, where's this guy at? I try to make things simple, bro. I don't know. I don't know. All right. Yeah. Hold on. Give me a sec. So I threw this website up, created it real quick. And so you're saying when you click on it, it says scheduled at, yeah, bro, that's because that's what I scheduled in and it's Zoom. But I mean, I went out of my way to throw in there to 7:30 to 9:30. I went out of my way during the announcement section of the Discord to say, hey, we're starting in 30 minutes. So my bad, you couldn't get those two reminders, man. My bad. All right. It is what it is. All right. So let's move into it. We've got a little bit of confirmations, at least in my eyes, of what these markets are doing. Nothing on really tap. Market seemed to like what he was saying. We'll dive into it, bro. I mean, okay, so did you listen to what he was saying, Chad? Yeah, I mean, so they reacted off of what his disinflation comment, right? Pretty much the data that they're receiving, however infant it is, right? However minimal and however early on in this like campaign against the evil inflation. However, that data is showing promising numbers, right? That's pretty much what it is. It's promising numbers. We haven't stopped inflation, right? We haven't even, I mean, the term slowing it down. Oh, okay. Yeah, we're slowing it down, but it's still happening. So the market, just like it did last month and the month before, the market's kind of like just shrugging it off. Like, and I've kind of talked about this before, like as a trader and an investor, you got to approach it two different ways. As an investor, I'm not falling for the market's, trickery. I'm not going to sit here and start investing in stuff that I want to invest in until I know we've got our bottom, and I don't think we have our bottom. As a trader, I talked about it last week, kind of what I'm going to be doing. I'm just going to be playing inside of the goalposts. I'm going to be playing inside the numbers, taking large volume off at key areas, and just playing the day to day and not trying to position into long-term moves. That's what I'm going to be doing. But yeah, everything that Powell said today is nothing different, nothing like crazy, nothing off the wall, nothing leading into what they're saying potentially is going to happen, going into the next Fed meeting. Now, the next Fed meeting, I can guarantee you rates are going to get hiked. Right. I mean, for those of you guys that don't subscribe to like all kind, different types of news medias or read any of that stuff. I mean, just to give you some headlines here. Hold on. I'll give you a brief synopsis here as soon as I could find the stupid thing. A brief synopsis. All right. Let's see. So from Bloomberg, right? From Bloomberg, they're just kind of giving their opinion on, what Powell kind of said, and they're taking into that, Powell stuck to his message pretty much about interest rates hiking, being hiked. They're going to continue to hike them. The market essentially is pricing in that the Fed is going to continue to do rate hikes and they don't care. You look at the Minneapolis president of the Fed. Um, he's talking about a 5 point. They're talking about peak rates, right? Peak rates. They're talking about it getting up to 5.4, right? Yesterday, the Atlanta Fed chair said that he was anticipating 5.1. And now Minneapolis says, no, I'll take your 5.1. We're going to call 5.4. Which is crazy. That's at 5.4, we're talking about another 75 basis points. So yeah, I mean, we'll see what happens, but I am, for me, the bias is still very positive. Follow the bond markets, follow what the US dollar is doing. Bond markets kind of told me what I wanted to see. We talked about it this morning. What do you make of the massive increase of jobs reports and decrease in unemployment? Confused on why those two are getting better with it. Well, what do you think? Give me your thought. What do you think about it? Well, I mean, yeah, it's not only seasonal jobs, but just think of it like this, right? There, how many of you guys, let me ask you this. How many people on this call right now work two jobs? It doesn't even, yeah, there you go. I mean, you got it, bro. Double and triple jobs. The same person's working three jobs. They don't count per person. They count how many jobs. So a lot of seasonal jobs, a lot of part-time jobs. I agree with that. I'm curious to see what the change in numbers is going to be in 2 weeks. They're saying the labor market is too strong, but I have no idea from what if nobody has money. Okay, so let's look at it. What from an economic standpoint, interest rate hikes do what? What is first of all, what is the Fed rate? What is that actually? Anybody know? Yeah, but what actually is the Fed rate? The rate for lending. What kind of lending? For banks? Okay. It's the overnight rate, right? It's the overnight rate that interbank lending is essentially charged. And every other rate that is based off of credit is based off of that, right? Yeah. Yeah, exactly. Overnight lending rate. Um, so the central bank sets the rate and banks adjust based on that. So kind of, yeah. It's think of it like as a starting point, but that's what that lending bank is paying, right? Now, why does give me the two, and I know some of you guys already heard this speech, but give me the two ways that the central banks are there, whether you believe it or not, right? I mean, we can go down the rabbit hole, but central banks are created for monetary policy, right? They implement monetary policy for economic stability. If you were going to put like what is the purpose of a central bank? How do the central banks create or influence or enact monetary policy in order for economic stability? What are the only two things they can do? What are the only two things that central banks can do? All right, one is rate hikes, right? One is rate hikes. What's the other? Somebody knows it. I know it. I can feel it. I can feel it down in my bones. Come on. Let's problem solve and think critically here. What is it? Reduce giving of loans? Nope. 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 Come on. Somebody knows it. You tried. No worries. No wrong answers. No wrong answers. It's not a wrong answer until you cut the labor market. No, they don't cut the labor market, right? Central bank has nothing. I mean, unless they're cutting their own jobs, right? But I know but I'd rather let them try. There you go. Whoa, whoa, print money. They control the supply of circulation, right? That's it. They control the supply of the circulating funds. That's the only two ways they can influence or enact or implement monetary policy, right? They print more money or they reduce the amount of supply going in. That definitely affects monetary policy. Now, quantitative easing. What is quantitative easing? Because that's what the Fed is doing right now, right? Quantitative easing is, you got the Bank of Japan. Actually, no, I take it back. I misspoke. They're not, the Fed is not doing quantitative easing anymore. That's what we did last year. We are doing what? What is the Fed doing? Yeah, reducing the money supply. Yeah. That's what we talked about, the printing of money. But so we talked about quantitative easing a while ago. The Bank of Japan, that's why I'm so bullish on yen right now, is because the Bank of Japan is doing quantitative easing. What is the Fed doing? What is the Fed doing? What is the Bank of England doing? What is the ECB doing? I'm gonna speculate that Bank of Australia is doing it too, Royal Bank of Australia, but I don't know because I haven't read anything yet on them. But I would imagine that's their next step. So what is something tightening? No. Yeah, what is that? What is quantitative tightening? What is that? So I'll give you a hint. And we're going to work through it. Trust me. You guys will learn some economics on this. So the Bank of Japan is doing quantitative easing. Wait, the reducing amount of money in no. I mean, you can stretch it to get to that point, but how are they doing it? Reducing government spending? No. All right. Hold on. No. We're all over the place here. All right. So what is the Bank of Japan doing currently or in the last, like, say, 60 days that pretty much puts the stamp that says they are doing quantitative easing? What physically is the Bank of Japan doing? They're buying bonds, right? They're buying bonds. They're loading up, right, their ledger with bond purchases and buying up all the debt. So what do you think is quantitative tightening? Well, not reducing bond buying, right? They're selling the bonds, right? They're getting rid of the debt. They're clearing. If you listen to what Powell said last week, among many things that he said, right? He went on about how very hawkish about the Fed will continue to raise rates, right? Nothing in the forefront is indicating for them to stop raising rates. They're going to raise rates. And what did he say at the end? He said that they're going to keep them there, right? We're going to raise rates and we're going to keep them there. How are we going to continue to control monetary policy? They're going to clear the books. They're holding a substantial amount of debt from bond purchases they did during COVID. Quantitative tightening now is getting rid of that crap, right? Getting rid of all that debt that they purchased up and clearing their ledgers. All right. Tightening and loosening reserve. Yeah, there you go. Yeah, exactly. Buying bonds. You got it, man. You got it. So does that make sense? Okay. So right now, what the Fed is doing now, let me throw this out there for people. Maybe you guys can think about this. So going back to the original question, why is the labor market so strong? So why is the labor market so strong? How are we getting these labor statistics? Does anybody know? Right, from surveys. Anybody want to take a guess? Not from, well, yeah, it's from consumer, it's from the consumer side surveys, and it's from businesses themselves. How many, give me a ballpark percentage of the responses that they get from these surveys? Anybody want to take a guess? Yeah, I think they serve the survey. I was reading over the weekend the survey that they used on Friday for the jobs for now. So they used two different surveys, right? Specifically, the unemployment survey had only a 36% response rate. 36% response rate. So take it with a grain of salt. Now, why do I think those numbers are as high as they are? Because I think people are just like everybody out there is hurting, right? Things are tough. Has anyone seen the price of eggs? The price of eggs is ridiculous. Have you seen the price of, I mean, of everything? So what are people doing? They're going out there and they're buying or not buying, they're um, essentially working two, maybe even three jobs. So when those jobs get created, say 100,000 people go out there and get a second job, you just created 100,000 jobs, right? The same people are still working them, but we've got 100,000 more jobs. So why is this important? Like what does this, without even looking at charts, from a economic standpoint, what does a strong labor market mean for a economy that is trying to combat inflation? What does that represent? What does that mean for us as far as what we can assume the Fed is going to do next? Higher rates. Okay. Is there anybody that thinks that because the labor market is doing great, that they're going to stop, they're going to pivot, and they're going to, because that's the talk of the town, right? The last 3, 4, 5 weeks, we've been hearing about investors are betting, they're betting that the Fed is going to pivot soon, right? What does that mean? Pivot. What are they talking about? Pause rates like Canada. So no. So the pivot, right? The actual pivot, what they're talking about is where they stop raising rates and they actually reduce rates, right? That's the pivot, right? Think of a pivoting, Now, um, obviously the Fed has been slowing down, right? We went from 75. But remember, I don't remember if you guys remember this, but back in May last year, Powell got up there on his podium and said, "There's no way we raise the rate to 75 basis points." Next Fed meeting, we raised it 75 basis points. And then what do we do in the next Fed meeting? We raised it another 75 basis points. So I really don't believe a lot of what's coming out of the central bank. But why is it important to know that, okay, if the labor market, and I know I talked about this morning, so those of you guys that heard me this morning, don't say it. I want people to really think about it. People expecting a cut, but not going to happen. Yeah, there ain't going to be a cut. I'll freaking, I can bet that to the house, man. Why is the market, if and don't look at the market like on a 5-minute chart, look at the market overall, like maybe on the 4-hour. Why is the market, specifically the bond markets, the dollar index, why are they showing bullishness? Why are indices selling off? Why? Talks, no, there is no talks of pivoting is out the window. Pivoting jumped off the 14th floor of the building and landed. It's gone. Pivoting is gone. There is absolutely no pivot in the future, right? There's not going to be a pivot in 2023. There will be a pivot maybe in 2024, but not in 2023. Why? Why is that a fact? Higher expected terminal rate. Okay. Why? Why is the terminal rate expected to go higher? And you're right. I mean, the peak rate. I mean, like I said, they're talking about 5.4 now. Last week it was 5.1. It just keeps going higher and higher. Why? Yeah. 5.4 is what they're talking about now. But why? Why is that now a more of a reality to be than a never was? Why last week were they contemplating a pivot like next month and now it's gone? Why? Come on, somebody's got it. I'll tell you right now, it has to do. Remember, why? Think of it like this. Why is the Fed raising rates? Because inflation, right? Fed is raising rates to combat inflation. Could the Fed, if it wanted to, could it go from 1%? Can it go to 5% overnight? Could they do that if they wanted to? No, they could, right? They could, but why wouldn't they? Okay, because of a recession. Okay. So think of it like this, right? It would hurt the economy. Okay, why would it hurt the economy? If they went with a ridiculous number and said, we're going to go instead of 75 basis points, we're doing 150 basis points overnight. Why would that hurt the economy? Because of the strong job report and inflation still high. Okay, so you're saying that they're going to continue to raise rates because of the strong job report and inflation is still high. Yep. Won't they have to raise their debt ceiling? Whose debt ceiling? I think you're talking about two things, two different things. Debt ceiling has to do with the U.S. government. That's like that's their budget that they're talking about. Wages can't keep up with the sudden increase of price. All right, no. All right, so here we go. All right, so central banks utilize interest rates, right? Or I'm sorry, Fed fund rates in the verbiage of the Federal Reserve. They use those overnight rates to combat inflation. They have to do it in an increment that will not be devastating to the economy. And what would be that catalyst? That would be what? That'd be a recession because, well, not even a recession. I'll take that back. It would be what? It would be a declining labor market. So they can't just go 150 basis points in two consecutive sessions, because then what's going to happen? Now they've got to take a step back and fight the jobs. They've got to try to bring jobs back. So they have to do it in increments. The strong labor market results that they're seeing now tells them that what, instead of going 35 miles an hour on the gas pedal, now maybe they can go 45 miles an hour. They can go a little faster. So instead of instead of saying it's going to take us 24 months to, whatever it is, I don't know what their projection is, but let's just say it's going to take 24 months to get inflation to 2%, because they've already said they need inflation to get to 2%. Anybody know what the current inflation number is right now in the United States? 4? I wish it was 4. I wish it was 4. Yeah. 6.8%. Are you sure? Is that what it's down to now? I don't think it's down, bro. I don't think it's down. We're at 8%. Inflation is at 8%. They need to get it down to 2%, right? So what the market is reacting to, and not so much in the short term, but what the market is pricing in now, is we have a strong jobs number, a strong labor market, right? The US labor market is extremely strong on paper, right? I mean, I'm not going to say it really is, because I don't think it's as strong as it's been. And I've been around. Listen, I've been working for man, I've been working for 30 years. I've seen it stronger. So, but we have on paper, the numbers tell us that we have a strong labor market, and we still have rising inflation, right? Every month it's slowing down, but every month inflation is still rising. So what's the Fed going to do? Instead of going 35 miles an hour, they're going to go 45 miles an hour. So they're going to be able to speed up or increase the rate with a little more veracity. Why? Because the labor market can take it. Right? They've already priced in. There's analysts and actuaries and all this that give economic feedback to decision makers on, okay, well, if you go 50 basis points, we have a plus or minus, tenth of a percent that unemployment will decrease. They've got all these risk factors that they're looking at. When you have a labor market that shows that the statistics that it now gives the Fed more power, or not more power, but more confidence to raise that rate. And that's what the market's showing you. That's why think about it. If the overnight rate's going up, What's the bond market going to do? Bond market's going to go up. Bond market goes up, the dollar's going up, right? That's how you've got to look at it. What's the point of manipulating the definition of a recession? To make the administration look good, bro. That's all it is, right? No sitting government official wants to wear the T-shirt that says I crashed the economy, right? Or something to that effect. So if you do the Jedi mind trick and say this is not the recession you're looking for, and there's no recession, then everything is great, right? You know what I mean? So that's the whole point. It's a play on words. That's all that's happening there. Does that make sense? Yeah. Does that make sense? Hopefully it does, right? Hopefully it does. I wrote a blog. It's on my website. I threw a blog in there on kind of like what my thought process was. I kind of detailed some of this, especially the bond markets, because that's something I've been looking at. Right. The other thing that you want to look at, especially if you truly want to know how the economy is really doing, you want to look at the bond market. But the other thing you want to do is look at the lending, right? With rates increasing, you want to start to see a decrease in the lending that's being done. Are we seeing that yet? No, we're not seeing that. Actually, lending is actually still pretty much at the same level it's been for the past, I want to say, I think they said something like 17 to 19 months, ever since the Fed, kind of almost brought us down to a 0% rate. So if you start to add everything up, well, businesses are still, getting lending at the rates that they were doing. Labor market is extremely still strong. So really, if you think about it, what has interest rates, what has the rate hikes actually accomplished? Does the credit card debt increase fall into lending? No. Like you're talking about how credit card debt is at an all-time high. Yeah, but that's more consumer side. That's not business side. Right. I mean, if you think about it, the rate hikes have done nothing. It's slowed, right? It has slowed inflation. That's all you can say, slowed. And slowed is such a very opinionated word, right? Because, well, how slow is slowed? Because the guy that came in second place behind the world record runner, ran slower than the guy who won the world record, but he's still pretty damn fast, in my opinion, right? He still probably beat, I don't know, 99.9% of everybody else in the world if he came in second place to the world record runner. So when you think about it, I mean, inflation's still high. I mean, dude, the price of eggs is up. I think it's something like 46% now since last year over year, 46% on eggs. Not to mention everything else. Butter is up, margarine's up, maple syrup is up. I don't understand why maple syrup's up. Canada's doing great. They're talking about pausing interest rates. I think maple syrup should go down. How bad do you think it will get for the average middle class citizen? Well, it depends on what you mean by how bad. So I think for the average person, right, me and you, what are we going to have to combat, right? Well, for us, it's the right at the forefront is the cost of goods and services, right? Inflation. That is what we're not. Well, if I was working a job, right, my employer's not going to give me any extra money for inflation, right? I mean, some businesses, you'll have a cost of living increase year over year. But I mean, if you think about it, I'll give you an example. My retirement has a built-in cost of living, a COLA, right? Cost of living expense. It's only got a 0.5% cost of living expense increase every year, 0.5%. What has inflation gone up in the last year? It's gone up, what? I think it's 5.75%. So that 0.5% that I'm getting doesn't do anything. It allows me to buy a McDonald's cheeseburger pretty much, So as the everyday consumer, I think the biggest hurdle that you're going to come across is everything's just going to cost more. gas is going to cost more, right? Most of you guys, I don't know where you guys live. I can tell you, and I'm sure everybody else is around doing the same thing. I live in Florida, right? Florida Power and Light raised, they sent out their notices at like 3 weeks ago saying that just to remind everybody that we got it approved that your rate increases are happening next month. So the cost of electricity is going up, right? Cost of everything will go up, and that's going to be our biggest combat. You know, as a business, right? If you're a business owner, what is going to be your biggest hurdle? Well, it's going to be twofold, right? It's going to be most businesses work on borrowing power, so it's going to cost, with the rates going higher, it's going to cost your business more money in interest rates to borrow money, right? So you're going to take a hit on your overall, on your profits from that. And then anybody know what anybody listen to this? I laugh because I was listening to tidbits. Anybody listen to what the State of the Union, what was the main emphasis on the State of the Union? What was, like, if there's one sentence that should be lasting, it should be what? Anybody read it or anybody listen to it? Nobody listened to it. So I'll give you a hint. So the government's hurting for money, right? What's the easiest way for them to get more money in? Taxes. There you go. They're raising taxes. So as a business owner, your taxes are going up, your tax liability is going up, and your borrowing's going up. So you're screwed. As a business, you're going to have the hardest time in this next probably like 12 to 24 months. As the consumer, as the everyday citizen, I mean, yeah, where it's going to hurt for us, yeah. I mean, it's the inflation. Everything costs more. And it's that I talked about that circle of economy a couple of weeks ago. This is where, as a consumer, right, you have less discretionary spending available, right? You got less money that you have saved because you're spending more of your saved money on everyday crap that you've got to buy anyway. So you're going to tighten up your wallet. That means that you're not going to be buying a lot. So if you're not buying a lot, businesses aren't selling a lot, and that's where we start getting into these, like, that's when the recession starts to hit. And this is why, like, if you listen to I know this has been a long rant, so my bad, but this is like, if you read a lot of these articles from these economists, right, like Morgan Stanley's chief analyst, or Deutsche Bank, I was reading theirs. They're talking about, well, the probability of recession, they're only putting it like 25%. And I just think to myself, I'm like, wait a minute. I know I've kind of like tightened my wallet a little bit. I'm not spending as much as I was, because I just, on principle, I refuse to spend, this amount of money for a dozen eggs, or I refuse to, my wife and I went out to this place we always go to dinner at, and like the meal, like normally we'd go in there, just the two of us, a couple of drinks, a couple of steaks and stuff like that. And we walk out like $110, $120, right? We went there the other night and it was like $180, and we ordered the same damn exact stuff. So what's gonna happen is the business is gonna start to hurt, and then that's where we really fall into the recession. So I don't know how they're calculating these assumptions that, yeah, we're gonna bypass this recession. We're gonna do the unthinkable. We're gonna do something that's never been done in the history of the world, the history of the U.S. economy. We're gonna bypass the recession. So yeah, it is what it is. Gas is down 10 cents. Dude, I love it. I love it when they do that, man. But yeah, gas is down 10 cents. Yeah, but it's up $4 since when you took office, bro. So I'm glad. They've got that in. So anyway, all right. Let's hop into this, because yeah, my bad. I apologize for the 30-minute rant on the state of economic affairs, but I'll tell you, this is I never was knowledgeable about any of this stuff until maybe about actually shoot like 10 years ago. So 10 years ago is when I went and got my graduate degree. I got an MBA and that's when I really started to like learn a lot of this stuff. And then, yeah, I mean, just get in trading in, progressing in trading really wanted my thirst for that knowledge. And yeah, I mean, I'll tell you right now, I spend more time today. I went for a walk, like a 45-minute walk with a dog. And what was I listening to? I listened to one podcast on, this week's economic data and, outlooks and analysts talking about what their thoughts were. I did that. And then, I listened to a show on one of the business channels that I like to listen to. Yeah. I mean, that's, it's sad that that's what I say that's what I do for fun, because that's what, when I'm driving, kids to practices or games, I'm listening to something like that. But then of course, my downtime, I definitely jump on my PC and play some games, or I play on the PlayStation and stuff to, to digress and unwind that. So, yeah, you got it. You got it. All right, cool. So let's dive into it. So news wise this week, right? News wise this week, we really don't have a lot on the calendar. Okay. Really what we have is, and the only thing I'm really going to be paying attention to is just the Canadian jobs numbers, right? Because I'm not, listen, I've got family that live in Canada. I know people that live in Canada. Nothing about Canadians. But when the Bank of Canada comes out and says, and in my opinion, like I could see this like in a cartoon, right? Like a meme or something. Bank of Canada comes out and says, we want to be the first central bank to say we're going to pause interest rates because everything is great. And I can't wait to just see this number get shattered. I can't wait to see it. And then they have to say, like, the old like psych. We didn't mean like we're going to pause interest rates, like not raise them. We meant we're going to take a pause, like a moment of silence, something like that. That's what I feel like they're going to do. It's going to be a play on words. What podcast do I listen to? So in the Discord, actually, does anybody know how I can share my Spotify playlist? And I throw it in the Discord. I'll throw it again. Actually, what I'll do is this. I'll hold on, give me a sec. I am going to make a list. I'll throw it on. I'll put a list of links on my website. That way it's just a whole lot easier. So hold on. So podcasts. I'll do this probably like maybe tomorrow while I'm waiting on some trades. I'll do it. Yeah. All right. I threw a reminder there. Yeah. So, all right. There we go. That works. Perfect. Anyway, so I'm very curious to see what comes out. And outside of that, I really don't see anything happening. We're not going to get out, we're not going to get any volatility tomorrow. I don't think anything's going to happen Thursday. Friday GDP numbers. All right, whatever, month over month, we'll get, maybe like on pound futures, you might see maybe like a 15 to 20 pip move, but that's about it. I don't see anything this week really just changing catastrophically the bias of what I've seen the market do. All right. So with that being said, let's hop over onto the charts. And really my focus this week has been, I said last week, I really wanted to incorporate some more yen crosses. So that's what I did. I'm looking at 3 or 4 yen crosses. I'm definitely hammering home the majors just because the dollar's really, and obviously I was looking at Cat Chef. So Cat Chef was on there too. But yeah, let's start with the dollar, right? Let's start with the dollar. Remember, I don't know, let's go back a couple of weeks, maybe even like the middle of December, right? When I said that what I really wanted to see on the dollar was I wanted to see a very prolonged, very, very organized accumulation of buyers in order for me to say, all right, dollar's going to go bullish. So, and what do we have? We have that, right? I mean, we talked about it last week where I was just kind of sitting back idle waiting, but this is extremely organized. This is very, very clean. All right. This is something that I really wanted to see happen. And yeah, I mean, for me, this is a clear accumulation, right? I'm pretty happy with what price has done in here. And not only that, but I like the reactions that we're seeing, right? The strength of buyers and what they're doing. All right. So you take let's start with the dollar index. Okay. And this is something, I don't know if you guys haven't, like I said, I'm gonna start posting maybe like two, if I get crazy, I'm going to do three, but maybe at least twice a week, I'm going to be posting um, just some blogs that I'll write. And the main reason I do it is because it helps me get all of the information that I need for what I want to see. So this was a blog that I posted the other day. Um, in here, I talked about a couple of things, right? I talked about the bond markets. And the main thing that I wanted to see was I wanted to see one, I wanted to see the dollar index close, and where it closed was great, but I wanted to see the 2-year yield close about above 4291, and I wanted to see the 10-year close above 3.52, right? 3.52 is what I wanted to see. We come over to the bonds, right? And I wanted to see us get above 3.52. We did that, right? We've confirmed an accumulation here. I wanted to see the 2-year get above, right? I wanted to see the 2-year get above 4291. And yeah, like we destroyed that. And even so, like what I want to see now is I want to see, do we actually even take out this high, right? That's my next go-to. Do we take out this high? When you look at what's happening in the bond markets, right? And the bond markets are where investors are truly parking their money, right? When we get into this is what's going to tell you whether or not true dollar index is going to really gain strength. Bonds correlate with DXY. Yeah. So think of it like this, right? And the easiest way I can do this is relate it to crypto. Everybody's got money in all kinds of cryptos, right? Let's say all these cryptos hit all-time highs. What do you do with, if you want to take profits, what do you do with those profits? Do you cash it out, or do you, so for tax purposes, so you don't have to pay capital gains tax, do you, right, or you put it in USDT, you put it in USDC, right? Let me ask you a question. If everybody on this call, if you were like me and in March of whatever it was, 2020, Bitcoin hit 3,600 and you bought a couple of Bitcoins, right? You bought it at 3,600 and now Bitcoin just breaks 50K and you're sitting on some good cash, but you don't want to cash out because then you got to pay capital gains on it. But you look over on whatever exchange and you see that USDC is paying 4.46% for you to hold USDC. So you take 50% of your earnings, you cash out 50% of volume on your Bitcoin, and you move it over to USDC. And isn't it, I mean, especially if it's a 1-for-1, isn't it great knowing that you're making 4.4% per year on that? Well, it's not like staking, right? Because what do you do with staking? Staking, you're essentially, you're giving your liquidity to that exchange. Think about it. So everybody that was staking on FTX, how are they doing right now? This is guarantee government-backed bonds. So for those of you guys that don't know, like about investments and stuff, right? You have all different types of funds, right? You have I funds, which are like international funds. You have, like you have high risk, you have moderate risk, you have low risk, and then you have G funds, right? G funds are all government-backed bonds. These are essentially the safest that you'll ever find. Why? Because in order for you to lose what you buy in these bonds, the US dollar has to collapse. All right. And I'll tell you right now, if the US dollar collapses, you've got more to worry about than, damn, I just lost 100K or 200K or 500K worth of my money. You've got more important things to worry about, because if that happens, that means that some catastrophic event to the upteenth power has occurred, and you're going to be living like Survivor for a long time. All right. What happened to bonds during 2020? What do you mean what happened to bonds? Like where were they? So on the 10 year, they were down here at, what, like 0.5%. Remember, so as the Fed, right, as the Fed adjusts the rates, so in here, what was the Fed funds rate? It was 0%, right? It was 0%. So this correlates with the fund rates. All right. So as the Fed increases rates, so does this. This continues to rise. Just look at where it's at. I mean, look at this thing. My high school social studies teacher once told me the 10-year T-note was one of the safe. It is one of the safest investments. It is. When I was in, maybe like 2008, 2010, 2008 is probably when I first started to really like invest. That's when I started, paying attention to like my retirement accounts. That's when I started to do like my deferred comps and stuff like that. And you really I had the ability to kind of manage where I wanted to put money. And yeah, I mean, the 10-year is probably one of the most, not the most lucrative, but it's the safest. It is the ultimate safe haven, right? Because in order for this to go essentially negative, the dollar needs to collapse. So, can you get in and out of bonds quickly? So, what do you mean? Can you get in and out of bonds? You mean like purchase a bond on a Monday and then sell it on a Wednesday? No, because then, I mean, when you buy, like when you buy the 2-year note, you're buying it for 2 years. Yeah, you're buying it for 2 years. So yeah, it's based off of, yeah. I mean, you can sell it, but you're going to pay a penalty. Yeah, you're going to pay a penalty. So yeah, I mean, that's if yeah, I'll tell you what. I mean, the easiest thing is honestly, you can YouTube it on understanding, government bonds like the 10-year and 2-year. There's definitely great videos out there that really like explain it. But yeah, you can't just purchase a government bond and then, I mean, you could by all means you could, but it's not, you'd lose everything you bought into it on, right? It's not worth it. Like I can tell you this, the longer, so it has a maturity date, right? When you buy a bond, it'll have a maturity date. And if you sell it after that maturity date, that's where you collect all of the interest that it's accrued. So just think about this, right? Let's just think about it like this. If the 10-year right now is at 3.6%, right? 3.6%. And let's just say it's a constant 3.6%. In 10 years, you're at 36%, right? Is there any other easier way to make money than putting it in the 10-year? Right? Or the 2-year, now obviously the 2-year fluctuates a whole lot more, and there's all kinds of them, but yeah. So that's something that the reason that this market is driven by the bond market is because this is where investors are parking their money, right? This is when you see like the dollar index fluctuating, the dollar index truly is being driven by the money that's coming in. So like when investors are truly parking their money in the dollar, they're parking it in government-backed bonds just across a wide array of individual bonds. Does that make sense? All right. So anyway, going back to just quickly onto these bonds, nothing in this bond chart is showing me weakness at all, right? Now the key for me is I wanted us to accumulate, which we did. Now I just need us to break above this high, and my next thing, so like on the 10-year, the next thing is I want to see if we can get back up into the 4s, right? If we can get back up into the 4s, and truly, like, this is something I was looking at the other day, I really wanted us to get down into here, right? I really wanted us to get back into this, something like this before going higher. But realistically, I don't see us getting anywhere close to like a 2.9% or anything. So do you use technical analysis on bond charts, or it's driven by fundamentals? But so just keep in mind this, right? Like you're not doing it like, people aren't buying the 10-year because, oh, we came into support, right? People are buying the 10-year because of whatever fundamentally is going on at that point, you know? So if you're an investor and you're holding a crap ton of stocks, right? And the Fed is telling you it's raising rates, and you're holding Google, Microsoft, you're holding Zoom, you're holding like all of these companies that in the last, like, I don't know, 60 days have said they're laying off people, they're cutting costs, they're executives are foregoing bonuses. Those are companies that to me aren't telling me that they're going to hit their bottom line in profitability. So what are you going to do? You're going to sell your shares and you're going to move it over to the T-notes, the bonds, right? And you don't care where you're buying in at. You're just going to buy in at that day. You'll dollar cost average if you have to. All right. So do I need it to come into this reaccumulation? No, but I'd like it to. You know what I mean? This would be a logical area. It just gave a really nice expansion. Maybe it walked itself back down where they need to come in and take this up again. But if you look at, just look at it on the 4 hour. There really isn't a lot to play on. Heck, we go up to the daily. Just look at the daily. Like, what are you going to play? Technically, what could you play on this? Nothing. There is nothing. You're not looking at it as in a form of accumulations, distributions, or heck, you can even throw like EMAs on there and all that. So yeah, it's more fundamentally driven. All right. Okay. So going back over to the dollar. So on DXY, we're accumulating in the middle of nowhere. So we are in the middle of nowhere, correct? Yes. Would that be a recipe for a redistribution? Not necessarily. So let me ask you a question. Could we agree that this is a bullish market? Okay. Do they need to accumulate in demand for this to go higher? Right. They don't. Now, do I look for, like, did I want us specifically, like, did I want us to come in here? Yeah, I did. Why? Because this is a highly probable area of where buyers are sitting for them to take it higher, but they don't need to go higher, right? Just like this accumulation here was nowhere, right? Just like this reaccumulation, or this one, or this one, or this one, or this one, or this one. I'll give you that one. That one probably came back into demand. Or this one. None of those happened in previous demand. So for me, fundamentally, yeah, they're what did I want to see? I just wanted to see evidence of buyers in this market, and I needed to see sustained buyers. So when we look at what's happened in the last like 20 something days, and you can kind of see like my thought process here, right? Like, I'm going to play in between the goalposts, right? What am I going to do? So I am looking to see, one, if we come straight back down, I'm looking to play out of here, or I'm looking to play out of here, right? 50 and 80 is where I want to play out of. You can see the alert. All right. And if we don't, I'll play reaccumulations to go up on the dollar. But what am I going to be watching for? Anything above this alert, which is 50% of this redistro, I'm going to stop. I'm just going to sit back and wait to see, do we break above this high? And then I'll continue back into my bullish play. But I'm going to be very cautious about what we're doing, because there is a lot of fun. You're not taking entries on DXY. No, I don't have a broker that I can. I mean, I have brokers that I can trade DXY, but I don't have a broker that I'm willing to pay the spread that these brokers are asking me to pay. So I don't, but I mean, just here to make it simple, then I mean, yeah. So what am I going to do? I'm going to trade EU just like this. That's how I'm trading EU. So, but everything starts with a dollar, right? Everything starts with a dollar. And if you pay attention if you pay attention to the last like 48 hours, the dollar is responsible for EU, AU, NU, UCAD. I didn't look at U Chef to be honest, just because you could see I've got my hands full with all these. So, but yeah, so with EU, right? With EU, yeah, I'm most definitely looking for this, right? I'm going to play in between the goalposts. This is what I kind of was looking for today. I wanted to see, do we redistribute? But I needed us to sweep Asian liquidity. And if we did, I needed us to break and confirm the redistribution. That didn't happen. We did sweep Asian liquidity, but we never broke the low. So what do? I'm going to simply just wait for us to come into here, right? This is my slingshot that caused the break of the distribution. Or I want to come into the entire UTAD and I want to play something here. That's it. So I'm either going to play pullback into here or wait for redistro. That's all I'm going to do. I'm not going to play like the small little order flow in that. And, my thought process already is this. What's my target? Let's just say that I can get somewhere, right around where price is. What's my target? My target is to get at least into this 50%. So this is 170 pip for me, meaning if I need a 1 to 10 minimum, that means that anything under 17 pip stop loss gets me going, gets me to open up the MT5. Right. So this being in discount still has plenty of room to get into the area that I want to get into. All right. And then, of course, even gravier if this thing gets up here, because now I got like a 400 pip move to the downside is what I want to do. Do you not go back and find the highest volume candle on each time frame anymore? So honestly, no, I'm not. And the reason I'm not doing that is because we're not getting a lot of, if you look at the price action over the last, maybe like 12 months, price action over the last 12 months, you've seen a drop off in volume. So for me, I just want to make sure I'm getting filled. I'm not so much worried about getting the tightest entry. I'm more worried about getting filled. So when volume picks up, then I'll go back to, and I still do. I mean, for the most part, I would say that maybe like out of every like 3 trades, like one of them, we'll find the highest volume candle, so yeah. Yeah, bro, you got it, man. Yeah. So, and you could see, I mean, and of course, depending on if we just sell off like tonight and we come into here and start accumulating, I'm going to be very cognizant about what we're doing here, but I'm also going to take into a consideration where the dollar index is, right? Because, using comparable strength, if dollar sweeps out this low, and obviously on the dollar side, it would be the high that it sweeps out. But EU is accumulating here. I'm going to pay attention on let's see, what happens if EU breaks the low? What happens if EU breaks this low and dollar breaks the high? What do you mean what happens? I mean, I'll keep selling the crap out of EU. Yeah. What do you mean? If it doesn't, what happened if it doesn't, I mean, like I said, I'm playing in between the goalposts. I'm looking for buys here. I'm looking for buys. So if it doesn't, I'm gonna take the buy. And what am I going to do? So if we come straight down here, where am I going to take my buy to? I'm just going to take my buy to right here, and then I'll look for a hedge into the sell. Obviously, if I'm in this position first, this is going to be really, really low risk. Yeah, that's how I'm going to play it. Yeah, makes sense. Now I'm only going to specifically do it with, and I'll get to it. Like I'm not going to do it with AU, not doing it with NU, right? I'll do it with EU and I'll do it with GU, so GU very much similar, right? GU. So GU, come on, trading view. There we go. So GU, yeah, GU, right now I'm calling this a reaccumulation. Honestly, I'm thinking it's just going to be a long, drawn out distribution. I think that realistically, this is going to be our climax to our rally. I think this is a secondary test. We may even get an MSAL, right? If not, we'll get maybe the up thrust, something like this. This is what I feel like this is what we're going to get on GU. Just solely based off of fundamentals at play. And obviously the next 2 to 3 weeks will really kind of affirm what's going to happen with the pound. But again, I'm going to play in between the goalposts, right? We do have a non-manipulative distribution here. So we have like a type 2. We have a potential slingshot if we end up breaking. If we don't end up breaking, like, what do I want to play? I want to play, and it looks like it accumulated pretty damn. Actually, did this thing come right off the 50? I stopped. I really didn't even. Yeah, I had to deal a lot with drywall today, man. I was putting drywall up in my kitchen. This thing came right into the damn 50, man. This son of a gun, bro. Oh. It looks so much cleaner on the hour, though. I mean, it's still there. I mean, you still got your accumulation. Um, I don't know. I'm gonna wait to see what we do after Asian. Maybe it'll give you the Frankfurt Open entry. Yeah. Anyway, this is kind of like my thought process. I'm trying to catch this first. I'd like for us to come into here. If we can come in there, that'd be great. It's honestly going to depend on where we are. And this could honestly just be a redistro, but it's a redistro too close to where I'm looking for a buy. So let's just say that we get, we definitely have a sweep. So let's just say that we come down here and show no signs of accumulation. I'm going to have to wait for this break before I can sell it from here first. I'm not going to try to buy coming out of, a redistribution with manipulation. Yeah, it was outside your trading time. It was. When's your trading time? I think that happened like at New York Open. Yeah, that was New York Open. When's your trading time? I mean, 8 a.m. That is the most voluminous part of the market. The retracement. Oh, you mean after the break? I'm guessing it happened after old Papa Powell said something, right? Yeah, that's when he hit it. Yeah, but I wouldn't. I don't even think there's an entry there. Yeah, there's nothing I would have taken on that. Yeah, there's nothing I would have taken on that. You would have played the 8 a.m. I mean, I would have played an 8 a.m. because it's 8 a.m., but I don't think there's anything there that I would have even taken. No, there's nothing here I would have taken. Nope, nothing. Diddly squat. I mean, you've got your accumulation here. I would have needed this break. And coming out of this break, I mean, your stop loss is already massive. So yeah, no, there was nothing for me to play. I did like this reaccumulation here though. That looked pretty damn clean. I would have liked does price? I don't think price comes back into that though, right? That may be where price comes back in later though. Let's see. Does she come back in here? Oh, this stupid thing. Let's see. No, she doesn't come back in. She doesn't come back in. She probably comes into, she probably comes in. No, she just falls short. I got it. Tried to complain to TradingView about their platform being so laggy for a discount. No response. Be careful, man. If you contact them too much, they're going to tell you that you're spreading hate speech, because that's what they did to me. I told them that for a company that has so many subscribers, you would think that they'd have a decent server that they can upkeep everybody's freaking data and not have to worry about lagging. And yeah, they told me that I was yeah. So if I had the time, I would create my own platform. I would if and trust me, I have the drive to just give the freaking FU to TradingView and do it, but I just don't have the time, you know. So yeah. But it is so damn expensive, man. It is. I remember when I first got into trading, I was paying. Now I didn't have so they didn't have the seconds time frame, the premium when I first got into trading. So I just had like a Pro Plus, and I was paying like $180. And I think now with the discount, I think it's like 350 or 380, something like that. And I mean, whatever, it's a business write-off, but like what are you paying for? Like you're paying for garbage, for crap performance. I mean, yeah, it's crazy, man. Yeah. If I'll tell you what, if if I have time, it's on the list. I'll create a trading platform that's open source or something like that people can, throw in, and it's just, yeah, Trading View is just whatever, bro. Oh, yeah. Anyway, yeah, I don't see anything on GU, bro. I don't see diddly squat on GU that I would have taken. Um, Wait, Trading View is a write-off? Yeah, why not? Why wouldn't it be a write-off, man? Do you not use it? Do you have a business? Is your business involved in your trading? Do you not use Trading View for your business? So it's a write-off, bro. Just like my cell phone, just like when I buy a computer, just like my home office. I work from my home office, so I write off my taxes, my electricity, my water bill, my landscaper. Um, yeah, man, business expense, bro. Yeah. What are you doing if you, well, yeah, man. Why pay the self-employee tax rate of 28% without deductions when you can just create an LLC, make it an S corporation, so you can make it even have more and carry a loss on it. The only thing you got to do is just got to pay yourself a reasonable wage. Um, but yeah, I mean, definitely worth it, man. I was looking to start an LLC to be paid by prop firm. Still figuring out how to structure it. If you're in the US, I would say it's easy. The structure is create an LLC, make it an S corporation, and incorporate it. That's all you got to do. So yeah, and then just everything that you can fathom for your business. That's your business expenses, and your tax liability will be written off based off of that. So let's just say, I'll give you an example, right? Like, hypothetically, so that I don't go into trouble with anything, hypothetically, if I were to say that I made a little over $352,000 from prop firms last year, and of that 352,000, I was able to say that I wrote off 250 change. I think it was like 252,000 in expenses, right? That's everything from, Trading View dues, my checking account monthly dues, commission fees on your trades, swap fees on your trades, your light bill, everything you can imagine, your tolls when you're driving. You guys sometimes, you guys have seen me like do Zoom calls from when I'm traveling. Those are business travel expenses. So you figure if hypothetically I made 350 and change and I wrote 250, I'm only liable for 100K in taxes. So at that point, the business, I would just have to pay business tax, and at that point on 100K, I think it's something like 18%. You're just liable for 18% taxes on that 100K, as opposed to like 28% on the 353. So yeah, Hotel rooms, bro. Absolutely, man. Why do you think when I do these Zoom calls, man, I'm doing it from the hotel because if the IRS ever wanted to pull my IP address, they're going to see that I'm always at the Hilton Grand in Orlando or at the Hilton the where's the one I stayed at in Vegas, whatever. Anyway, absolutely, man. So it's just classified as a trading business? No, 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 no. Absolutely not. No. Yeah, do not set it up as a trading business because I'll tell you right now that will put up flags up the wazoo. Yeah, a quick Google search. I'll tell you that a quick Google search will tell you how to create your articles of an organization. So yeah, yep, yeah, yeah. Yeah, I can tell you, you don't need to be very specific. Um, it could be extremely vague as long as it doesn't have keywords that'll put red flags. And I'll tell you right now, a trading business, anything dealing with the words like cryptocurrency, anything dealing with money transfers, anything monetary, it's going to be red flags. So yeah, I would, yeah, a Google search of what? Um, what do you mean a Google search of what? Of creating articles of an organization. Yeah. And really the articles of organization is just for your LLC. Some states like Florida doesn't even require you to do that. And if you do if you do a if you do an S corporation, that's when you have to do an articles of an incorporation, and that's a little like, yeah, you just have to be. I would say this, right? Less is more. The less. Here, I'll give you an example. Like under my, give me one sec. Boom, 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 boom. Hold on. Give me a sec. Trying to see. One sec. Oh, for the love. All right. So my articles of incorporation. I'll tell you right now. I'll give you I'll read out the verbiage for you just so you have an idea. Hold on. You were waiting until you were more profitable, so I don't operate under a loss. Um, are you in the U.S.? So why don't you want to operate under a loss? You can write losses off for 3 years in a row, man. You can take your losses from 2022 and write them off for the next 3 years, man. Why? Oh, yeah, not financial advice at all. This is not financial advice. You thought it could be a red flag if your profit margin was low? A red flag to whom? To the IRS? So wait, let me get this straight. Let's say hypothetically, you created an LLC and you lost $10,000 this year. And the IRS calls BS on that and audits you. First, they're not going to audit you. Well, I take it back. They could audit you, right? They could. What are they going to find? Are they going to find that you have $1 million from profits that you've got sitting in your account somewhere that you didn't claim? No. I mean, if you're at a loss, you can carry that over. You know, I mean, I'll tell you right now, the benefits of having the business is one, the protection. But two, it allows you to, if this is what you're looking to do full time, right? I'll tell you right now, you need to have tenure in your business because everything that so I'll give you an example. Last May, I bought a new vehicle, put it in my business name, paid it with my business profits, right? One, it was a tax write-off. That's why I did it. I'll tell you right now, did I finance it? Yeah, I financed it for 1 year. Why did I do that? One, because I needed to build the business credit. Would I have ever have been given financing for it had I not started that business back in 2018? No. If I started that business in March, do you think I'd get financing for whatever 72,000 or whatever it was? No, I wouldn't. So you want to make sure that you've got that going. Would losing a $100,000 prop firm be considered a 100K capital loss? If you can prove that, I'll tell you right now, here's my suggestion. Again, not financial advice, but I'm just going to spitball here. Hypothetically, if say you bought a challenge with a prop firm and you failed that challenge and you're like, bro, this prop firm is dumb. I'm never going to use it again. Hypothetically, if you paid this challenge with a credit card, I would do a chargeback on your credit card and get your money back from the challenge. And then you'll just be banned from using that prop firm ever again. But who cares? Good riddance. They suck anyway. If, like in my case, I lost my TPT account, but did you ever have ownership of this fictitious demo account to begin with, is the question. And if the answer is no, then no, you can't write it off. So, okay. So real quick, to answer your question about to put under your articles of operation under purpose, because this is where I think you're asking, right? Under purpose. I'll give you exactly the verbiage that I have in mind. And, I was always a very good user of words. All right. The purpose of the company is to engage in and conduct any and all lawful businesses, activities, or functions, and to carry on any other lawful activities in connection with or incidental to the foregoing, as the member or members in their discretion shall determine. That's my purpose. All right. So here, if you want the little, you can copy this real quick. That is the vaguest. If you looked up the word vague in the dictionary, you would see Mike Acevedo putting that in his operating agreement. So there it is right there. You can copy and paste it. And yes, it pretty much allows you to do whatever the hell you want. So that's it. All right. Hopefully that makes sense. Not financial advice. Consult attorneys or tax people or anybody other than me for any of that information. I am just a lowly business owner who does it. So that's all. With prop firms and your business, does the prop firm have to be U.S. regulated? No. So a prop firm that is not in the U.S. is not going to issue any tax forms to you. It is upon you to file the proper tax forms. So there you go. Yeah. Okay. All right. Anyway, let's get back over here. So GU, we talked about GU, pretty simple. Talked about EU. Let's get over to AU. Let's get over to AU. Otherwise, I'm going to be here all night, and I've still got some junk I got to do. And I promised a buddy I'd play some Call of Duty with him later too. So, all right. AU. All right. So who's taking a look at AU? Has anybody taken a look at AU at all? What do we notice about AU, specifically correlating AU and NU? What do we know? It broke the low. NU hasn't broken down yet. So, all right. And this is where NU and AU have kind of been like differing. All right. So first and foremost, NU is definitely the weaker pair, right? However, from a structure perspective, you're absolutely right. You can see where we haven't taken out this low yet. Now, because of what AU has done already, right? And really where the discrepancy is this. On AU, we did this, right? Broke this high, came down here, and then we did this. And ultimately, that's how we would see AU. So do I necessarily need us to break this low to start shorting NU? Absolutely not. I'm going to come back into this distro if we get it, right? If we get it, game on. Or if we get the old redistribution, I'm going to do it. Now, you got to think about it from a risk perspective. Where's the location that we're going to be targeting? So like if I were to take a short right now, I'm taking it into like this 50%. So that means that I've got 94 pips. That means that for me to get my 1 to 10, she's got to be under a 9.5 pip stop loss, right? With spread. So just keep that in mind. If you're thinking of it, in the terms like I'm thinking from a risk perspective, is it worth me taking this trade? That's where you got to look at it. All right. So for me, it's pretty simple. I'm either going to play. And the reason I am not interested in trying to buy NU or AU is simply because of what the data is showing. Okay. Fundamentally, hawkish or dovish on the ECB. What do you guys know? Are we hawkish or dovish on ECB? Hawkish, right? Everybody hawkish like a mofo, man. She came out, what was it? Friday morning, she came out and pretty much slammed the book on the podium and said, if anyone thinks we're not raising rates, leave. That's pretty much what she said. So ECB, hawkish is crap. What about Bank of England? Hawkish, dovish? Hawkish, right? Hawkish, same thing. We all know the Fed. I mean, Powell's squawking up there. He's squawking. Rates going up, rates going up. We know Bank of Canada. We talked about that, right? Bank of Canada is dovish. What about the RBA and the Kiwi? What do we hear? Yep. Okay. What do we hear about? You think they're hawkish? So what gives you, or what's giving you that? Hold on. Oh, hold on. Sorry, my wife was texting me. So my daughter, my middle daughter, RBA increased by, yeah, but that just because they increased by 0.25% doesn't mean you got to listen to what they're saying, right? The anticipation was for a 0.25%. But what do they say is the outcome? Like, what are they, like, are they, but won't be going too much? Exactly. Right. They won't be going too much further. They pretty much said in their release that, they're starting to, they want to start to slow down and see where the cards lie, essentially. Kind of not so much of a dovish tone like the Bank of Canada, but if you look at the Royal Bank of New Zealand and Australia in relation to what the ECB, what the Bank of England, or what the Fed is doing, if you were calling, I mean, if you were calling some birds of prey, yeah, we definitely got ECB, dollar, and Bank of England are extremely hawkish, and the Kiwi and the Australian dollar are, I feel like they're potentially going to be continuing with maybe another 0.25 basis point. They're not going to come in with 50. They're not coming in, I mean, oh my God, it would be pandemonium if they came in with 75. So that's my thought process is, all right, so do I want to try to buy the Kiwi here, or do we think the dollar is really going to overpower this? Because as of right now, NU is being driven by the Kiwi. It's not being driven by the dollar, right? Same thing with the Australian dollar, right? That AU is being driven by the Australian dollar, not by the US dollar. I feel like as the tide starts to turn and we start to get a little more dovish tone out of these central banks, but the Fed pretty much comes in like we're expecting next FOMC and throws in a 50 basis point, this, this is not going to be a bullish market on NU or AU. Not, and not that it is now. I mean, it's just order flow, but this is why I'm looking at doing what I'm doing. All right. So, and hold on, my bad. My wife, anyway, my middle daughter, she, I don't know if I talked about this last time. She, the tournament that they won their championship at. So they're a 14-year-old club team that they've been playing together since they were like 10, and they're ranked right now. The national rankings just came out. They're ranked number 11 in the nation, which isn't surprising. I mean, last year I think they finished like number 8 in the nation is what they finished the season at. So, but they're number 11 in the nation. And so my daughter was, she's my social media coordinator. And that's what I'm going to start hiring as, because she's got a public Instagram page for her volleyball recruiting, and Press Sports, which is a huge recruiting platform. I mean, they're like the ESPN of recruiting. Shared her or grabbed her post that she put, and they put a spin on it, and they put it on TikTok, they put it on Snap, they put it on all this stuff, whatever. But so it's at 1,000,004. I think it's 1,000,004, 1,000,003 views, and yeah, so she's all happy about that. It's pretty cool, man. Yeah. So they're fun to watch. I'll tell you that, man. They are fun to watch. I love going. I mean, yeah, I love going to watch her play, man. She is 14. She's 6 foot tall. She's a setter. And man, she can hit the damn ball too. So it's always nice. Yeah. No, she's got her dad's height for sure. I tell her to thank me all the time. She's not like her mom, who's like 5'7". Do the central banks correlate with each other, like the Fed increases? So no. I'll tell you right now, it's not like they talk to each other. No, what they're doing is they're looking out for their economy, right? Like the ECB doesn't give a crap what's going on in Australia. It's not their economy. They don't care. So it's very now, is there an uncorrelated, semi-conducive, like, all right, as they're talking, well, the ECB last week raised theirs 50 basis points. Maybe we can get away with raising 50. I think there's something like that, but I don't know. I mean, those things are closed door, right? Those meetings are all closed door meetings. There's no, there's minutes, but those minutes are very tapered. They're very, they're very censored. So, really, unless you are a party in there, you really don't know what's actually being spoken of. So, but anyway, all right. So that's my game plan with like AU and NU, right? I mean, I'm going to be looking. Mostly, I'm going to be looking for continuation on dollar strength. So I want to see if I can play continuations on the downside to these. All right. Looking at the big picture, I mean, you can see we've got just a tremendous, I mean, like for me, this is, and maybe I'm just one-sided bias on this, but if I can catch a short on this damn thing and snag 750 plus pips on it, I'll be pretty damn happy. I mean, that'll make up, my January. So I finished January. Now, granted, I've been working on a lot of different projects. So, I didn't even start really trading until maybe like the second week of January, but I only finished January with like, I think it was just under 2.75%. It was like 2.78% is my profit for January. I only took 8 trades. Part of that was just because I've been busy. I've been busy with freaking volleyball. I've been busy with baseball. I've been busy with soccer. I've been busy with, every one of my kids. Actually, my son is playing 3 sports right now. My son's playing, well, he just finished up soccer. He was playing basketball, and now baseball season starts. So I just got tied up. And, I've learned that if I don't have the time and commitment to manage my trades, don't even take them, because you're going to make mistakes and it's going to cost you money in the end. So, would GU short be better with 2? Yeah. I mean, I'd love to short GU. I'd love to short them. Ideally, I mean, and you can see like where I'm trying to target this bad boy, red dot. That's where I want to take it to. I mean, bigger picture, you can see like where we're kind of lining up on. Bigger picture, you can see ultimately how this is going to shape out. So I'm kind of, are any of your kids interested in trading? So my daughter's definitely not. My son, yeah, I mean, he plays around with it, but I mean, he's only 10. So, for him, he just wants to get out there and play sports or play video games. So, yeah. All right. So we talked about those. UCAD. So let's get into UCAD. Anybody catch the buy on UCAD yesterday? It gave a nice little play, but so bigger picture, I mean, you can kind of see where I'm looking, right? I wanted to see ideally if we can come back down into discount. This is going to be first priority down here, right? Um, what I did want to see is if we can get back into Friday's price action, which is right around our 50% of our entire leg, this Friday price action right here is kind of what I wanted to see. And you can see I had my alert here. I was waiting to see if we can get something down here. This stupid thing probably isn't going to come down, but it is what it is. But there was just a super, super clean entry that gave, I mean, if you offset it, I think it was like a 1 to 8, gave just a super clean reaccumulation in here. And it was just you're looking for continuation move. You get, how many times have we seen Asian liquidity? We see Frankfurt come in and sweep that sucker, confirms reaccumulation by the break, and then comes right back in to mitigate. So this is one where you could have played the full volume candle, but realistically, it was just easier to split it 50 and 80 and just offset the 50 just below the last wick, making sure that you're in it and just targeting the next high, which it comes in during New York. So it was like almost a 1 to 9. I mean, for me, pretty clean price action. Hold on one sec. He's still talking, bro. I've got the State of the Union still in the background, bro. He's still up there. Yeah. I'll catch the rest of his speech later. I'll read it tomorrow morning. Yeah. Anyway, so yeah, you can give a nice little entry, especially for a Monday. Wasn't too bad. All right. So, like I said, this is kind of where I'm looking at UCAD. I want to see do we and realistically, the only thing that gets me into this is we start consolidating, building an accumulation maybe during Asian. We get maybe the same Frankfurt sweep and a break, or I want to see us to get down into here for New York. That's what I want to see. Yeah. So that's UCAD, right? That's UCAD. ACAD and NCAD I've got on here, but I'm honestly waiting. I'm waiting. I've been waiting. I feel like I've been waiting forever. I think it's been like 2 days, but there's my NCAD, right? I mean, nothing happens until we break this low. I got my alert, and we either redistribute, and I play the redistribution, or we're coming back up into the distro. And if you haven't, I would definitely go and back test this price action because this gave some decent entries. This gave some pretty clean price action to play. And yeah, I mean, I don't this for me, this doesn't happen this week. We don't have any real volatile news to get up there. And this is a big haul. I mean, we're talking for NCAD anywhere between like 180, 190 pips to get up there and then start to build something for me to get into. Um, and much like ACAD not put together as well as NCAD, but still the same area, right? I'm still looking at this redistribution as my point of interest. All right. I'm not going to do anything though until NCAD breaks that low. I already know, I know that ACAD's broken order flow, but I want the market cycle to show me that we're in the down cycle on NCAD before I start doing anything with it. All right. Does that make sense? And hold on, bear with me 1 second. Bu- 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 bum. Okay, cool. All right, cool. All right, so ACAD, the other ones I'm looking, continued with dovish Canadian dollar, so I'm bearish on Canadian dollar like I have been. We've got a confirmed redistro sitting here on CAD Chef. Price did break the low. Price coming back into 80% of the entire leg during a New York distribution, right? That ends up breaking order flow, coming back in to the, discounted, into the premium 80% of where I wanted it to come into. And there was, if you need something to back test, I would definitely back test, maybe from like the 29th up until recently, maybe even like to 5th of till this Sunday. I would back test that price action because this did give some pretty clean entries. But you can kind of see what I'm looking at. I'm just following the down cycle. We do have a distribution, right? We do have price confirming a sign of weakness. We do have a lower accumulation in here, a reaccumulation, another distro. That distro leads to another break of order flow. So what do I want? I just want price to come back into supply. Right. So ideally, that's what I want to see. I want to see us if we can trade back up into here, and even more so if we get like that Frankfurt sweep and then the break, I'll play that down. I'll play it down. I'm bearish on Canadian dollar. I'm bearish on CAD Chef. I'll play this all day long. Same similar scenario on CADJ. Right. I'm looking at these yen crosses. Bank of Japan's really doubled down. What am I looking at? I am looking, I got to zoom out a little more for this. So what am I looking for on CADJ, right? It's pretty simple. Do we sweep out liquidity and play back into our supply point that's maintaining our leg? Distribution somewhere up here, my alerts at these highs, or do we confirm this distro, break the low, and either play continuation move or mitigation to then take it lower? That's what I'm waiting on. All right. This chart looks pretty damn clean. I like CADJ. I'm not looking for buys on this thing. Bank of Japan's been very, very, they're not holding a poker face. They're 100% committed to quantitative easing, 100% committed. They're putting their mouth where their money is, right? Or putting their money where their mouth is, I guess, in this case. They're buying up all the debt. So they're doing what they need to do to really strengthen that yen. Look at UJ. UJ's falling down, makes sense. So I'm going to continue to short the crap out of these. All right. And then same with AJ and NJ, right? We are sitting here. We came right back into our slingshot. All right. We've had our accumulation. We had a pretty decent distribution that came in there. Price from there gave some really, really clean price action to work this down. And where am I at with this now? Well, we came in to my last point of interest. We've broken order flow. So now what I want to do is I want to just get price to come back into discount. Into premium, so I can get some kind of price action to short it off from somewhere up here. So I don't have a limit order I'm going to put because this is all just order flow, but I'm going to play price action, right? I want to see a schematic, right? I want to see a distribution just like we saw here, just like we saw here, just like we saw here. I want to see a distribution. It's not going to take a 5-second chart to do this, right? It's going to take a little bit of time. Let it build. Let it give me a good change of character. Let me get evidence that sellers are filling sell orders. And then all I need is weakness and a mitigation. Boom, I'm gone. I'm in it. All right. So AJ, much like AU, right? We have NJ that is definitely leading, right? You could see the divergence where we've got this break here. And if you look over at AJ, you can see we don't have that break quite yet. So NJ definitely, the Kiwi is definitely showing the weakness. I'm all good with that. And this is pretty simple, right? Just walk this down. Look at how clean this bad boy has just been walking itself down. So for me, it's very simple. I'm just waiting right here. Actually, I don't know where my alert went, but I'm going to put an alert right at like 83,400 is where my alert is to start looking for shorts. And ideally, what I want to play into is I want to play into this redistribution here that happened during crossover. Or I want to come into the whole thing, right? Ideally, what happened during this news, because this was Australian news yesterday. So I do want to see if we can come into there. Or the other way that I get into this is this accumulation manipulates and then redistributes, and then I play continuation move. All right. But I'm most definitely looking shorts on yen crosses, looking shorts on CAD Chef, looking shorts on these, and buy on UCAD. And I'm looking to short all that bad boys right there. So, and then EJ is the only other one that I've got on my list that I'm looking at. EJ finally gave me a little bit of confidence. I was looking to short just down into this area today. At this point, though, where we are in the distribution, I just need to wait. I just need to wait for this low to get broken. That is all. So nothing's really going to happen until we can get this breakdown here to confirm this distribution. And this looks exactly like I was talking with KJ, right? Where KJ, I wanted us to see a sweep. We don't have any sweep yet, no manipulation. We could still, and that's why I have this higher alert. That's why that alert is here. Because if we still go higher, I mean, this is my point of interest. So this is kind of my game plan. This is what I've got on the primary list. This is what I'm going to be looking at for this week. And then indices, indices are indices. I mean, I'm not going to play in the noise. You sit back and just take a look at what price action is showing us. And I mean, this stupid thing came right into the 80%. Look at this thing. Look at this thing. So she came right into the 80. So what I was looking at this morning pre-market was I wanted us to redistribute. I wanted us to sweep Asian liquidity first, which she did. And I wanted to see a distribution in here. I didn't get into anything. There was absolutely nothing for me to get into there. And then, of course, what did I want to see? I wanted us to see the break. I needed this break right here for me to get involved. So 30 did absolutely nothing for me to want to do anything with this. Yeah, I mean, this really hasn't given me. Now, I like the manipulation. I did like the manipulation, but it just we knew where there's going to get some volatility in there with Powell speaking, but I mean, there's really nothing for me to even look at this point. It's got to do one of two things. We need to break this low, or we need to break this high. Anything in between here, I'm not going to play, because we've been in this song and dance already. So I'm waiting to see, do we go higher or do we break this low? And I'll play continuation move redistros. What did SPX do? Pretty similar, I'm guessing. Yeah, I mean, this is a super clean accumulation. I mean, you look at this thing. I mean, you have buyers in this market. That's your spring. So yeah, when you look at this chart, what's missing out of this chart for sellers? What do we see, or what do we not see? No, I mean, I'd say there's a pretty good amount of manipulation in there. Changing of hands. Now what else? What else do we not see? Signs of weakness. There you go. Yeah, I see diddly squat for signs of weakness. Every time. So let's just look at it, right? Every time we see a massive sell order come in. So let's see. All right, big sell order comes in here. Really no weakness. This is just garbage price action. Big sell order comes in, but doesn't even break any low, right? Another sell order comes in, still no low. You've got this here that finally, but it doesn't even do it during New York. It has to do it during Asian, where it just kind of falls off. And then, I mean, I guess you can say, well, she did play probably into 80%. I'm guessing into that. And then she does break this low. But if you just look at it like that, but if you're looking at it from a schematic perspective, this is an accumulation, right? That's an accumulation. That's your manipulation. So when I look at this, there is, someone said it, there is no changing of hands. You're not looking at the market going from weak-handed sellers to strong-handed sellers. You're not looking at a great deal of one, in my opinion, you don't see a great deal of volume being traded in this. I think it's very susceptible to manipulation. Hold on. Hold on. Hold on one second, guys. All right, cool. Yeah. So, I mean, this is just a whole lot of noise. When there's a lot of noise on the lower time frame, just zoom out and see what you can see. And I mean, one, this is just very much bullish, very much bullish. Ideally you're looking at break here. So these would have been the point of interest. Ideally, if you're going to look buy, for me, I've got to wait for that break there. That's what I have to wait for. And maybe we get something like this, but yeah. Uh, I'm confused on the sign of weakness. You mean when it's making lower lows in terms of order flow? Um, so that's part of it. Think of also of like intent, right? Think about think about what is supposed to happen when sell orders are being filled. Think about the reaction. Think about what should be present, or what visibly should be present when large sell orders are being filled, and think of the intent and direction that the market should be doing, right? It's not highs and lows, right? It's more of direction. It's more of the intent would be the best word to use. All right. Yeah, man. I can only imagine what the spreads are going to be, or like on these huge candles, man. And it's all just news driven. Yeah, this is all just news driven. All right. Hold on. Let's take a look at Nasdaq. I mean, I didn't do anything with indices today. I don't think I do anything with them tomorrow, unless something dramatically changes. I mean, just look at how long we've been here. We've been here now 36 hours just in the same price action. Um, yeah, I mean, you could see I've got the alert here because I was kind of hoping to see manipulation, and then maybe it gives something like this, but you've got manipulation on. So Nasdaq doesn't give manipulation, but you got manipulation on SPX, and you've got it on US 30. So realistically, for buys, I mean, this manipulation right here is where I'd be looking, but it needs to break this high. We need to break that high for it to do anything. And you could see I was kind of hoping we get here, but we're just falling short. So I probably don't do anything with indices. Hey, what's up, bro? How do you deal with slippage? What do you mean? Yeah, what do you mean? Like, how do you deal with it? Like, what part of the slippage? Like you move your stop loss, and slippage causes your stop loss to take a crap, or yeah, what do you mean, bro? FTM USDT. What do you mean? Can I check it? What do you want to know about it? I mean, I don't margin trade crypto, bro. I mean, we can look at it, but what do you? I mean, yeah, I don't know what you want me to do. What do you want to look? Yeah, looks pretty bullish. Yeah, it looks pretty bullish. Like a lot of coins. Had an order at break even, then results in a small loss. Yeah, bro. Was it because of news? Yeah, was it because of news? Yeah, if it was because of news, I mean, you're just at the mercy of your broker. You can, but and if you're going to put it in profit, here's the issue you're going to run into. How many pips do you put in profit? Because I'll tell you right now, I had a trade that I remember to this day. I was in a GJ buy. No, I was in a GJ sell. I was a GJ sell, and I was 150, maybe 130 pips in profit. And I had my stop loss at break even. I had partialed out, and I got into the trade on a Thursday. I'm sorry, no, I take it back. We got into the trade on a Thursday during London crossover, and I was up like 80 something pips. I moved it to break even, took some partials. Friday, it was like 130, 140 pips in profit. And I had planned on holding it because my next target was like 200 pips away. Sunday gap happens, and it was right as like one of the Brexit freaking weekends, and GJ gaps 200 and something pips. And I end up, instead of a break even, I end up losing. And I think the original stop loss on GJ was maybe like 8 or 9 pips, and the gap was 100 pips. So I lost 10 times what I wanted to risk. So meant funding, no news. Well, if it's no news, then your broker's screwing you over, bro. Because if you got your stop loss there should be if there's no news, there should be no reason that your stop loss doesn't get honored. News is one thing because it's high volatility, but the broker screwed you over on that, man. Yeah. Yeah. As far as Phantom, man, I have no clue, man. I haven't looked at anything on this project, man. Um, I couldn't tell you. I couldn't tell you no clue, bro. Yeah, no clue. I couldn't tell you, man. I could tell you on some of the crypto stuff, I'm still waiting, man. I'm still waiting BTC. I think this is like I talked about before. I think we're coming here. I think we're coming here before the next push down. I mean, heck, this distribution could be what sends us down now, but I mean, we'll see. I'm really not. I mean, I'm definitely still very in the crypto game. I'm still mining a crap of stuff. Still mining, staking, node running. Um, but yeah, I'm not ready to throw any money investing in or yeah, I don't trade it, but I'm not throwing any money to invest it until BTC gets to the area, or at least until we get closer to the halving. Once we get closer to the halving, I'll kind of deal with it. So, but yeah, that's pretty much everything I'm looking at. Um, Anybody else have any last minute questions? Oh, wait, let's see. Hold on, bro. Do you like that distro on gold or silver? So I think we looked at it this morning. Hold on. Boom, 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 boom. You talking about this one, right? Right up here? Yeah, I mean, I like it. It's in a good area. Yeah. Yeah, I like it. Yeah. Yeah, bro. Send me an invite. I think you sent me an invite last time, man, but I was in a game. And yeah, bro. But yeah, send me an invite, man. I only play DMZ though, right? What do you play? Do you play like I don't know. I like to play DMZ though. This distro looks pretty good, man. I like it. Yeah, cool. So should you have just closed the whole trade on that GJ? No, man. I mean, think about it. I mean, it's this is the dangers of trading, man. Like realistically, you're up realistically 130 pips. Do you have any fear that the market's going to gap and take you out? No, but it happens. It happens. I lost. I mean, heck, I lost, dude. I lost some serious cash one time on a US 30 man deal, and yeah, I mean, it's part of the game. This is what you do when you're at the mercy of your brokers. So yeah, I mean, sure, I could have closed. I could have closed the trade out at at like a 1 to 80, or not a 1 to 80, at 80 pips, and caught like a 1 to 20, 25. But what if Brexit doesn't happen and price ends up going like Chef JPY for a 1 to 1500, and I could be sitting here telling you about what could have been, or what never was. I mean, it's all about part of risk. You gotta have that understanding. Did I look at EG? I did not. EG's on my secondary list because I'm not going to do anything with it. I mean, you've got fundamentally what's getting you to even look at EG. Yeah, fundamentally, what even gets us to look at EG? It's reaccumulated, right? So I'm not looking to short it, and I really don't want to buy it. So, but if I did want to buy it, right? If I did want to buy it, it's going to be out of here, or it's going to be out of here. But I don't want to buy it. So nothing for me is happening on EG. I mean, we're talking maybe 100 pips to 170 pips for a buy area, but just keep in mind where you are. Just keep in mind where you are, you know? So I really want nothing to do with EG. It's going to sit on my secondary list. So have you ever meant to put a 2 lot, but accidentally put a 20 lot? No. I mean, maybe like in the very beginning, but no, I use a position size calculator, man. So that PSC, I don't even put the lots. I just put how much money I want to risk and put the stop loss, and it calculates everything for me. And then when I hotkey it, it asks me for a confirmation, and it's as long as it says, yeah, I risked $500, $2,700, whatever it is, whatever I'm risking, as long as it shows that was my risk, that's all I care about. So yeah. Yeah. So, but that's it. I mean, that's pretty much everything I'm looking at. Yeah, it is what it is. Anybody else have any last minute questions? If not, I'm gonna call it a night. I've got a couple of things I gotta do real quick. I gotta start some stuff up as well. And yeah, I'll be ready for tomorrow morning. Actually, I'll probably be up early tomorrow morning too, man. So but yeah, cool, awesome. Listen, thanks for everybody hopping on. And yeah, if you guys have any questions, hit me up. Like I said, I'll be dropping. I mean, some of the stuff on my website, I can't, just for like liability crap, I'm not going to put, but I'm going to be doing some like podcast stuff. I'll be doing some blogs I'll be throwing on there as well. So yeah, it's all good. If you guys have any questions, hit me up. Have a good one. I'll catch everybody later.